Hello, everyone. We're live. So I'm Guillaume Lambert. I'm here with. Oh, let's stop that annoying music. I'm here with Rosalie, aka Crypto Queen. This is Stop Losing, Start Trading. So this is the show where we uh, explain options principles, and then to of course the audience, but also I do it with Rosalie. So she's getting very good at it. Where I'm teaching her to trade options. It's all not financial advice, but discussion that we make, the intern sometimes decides to listen to us or not. And they are trading, dare I say, pretty well over the past few months, despite all the market moves. They were positioning themselves very well, thanks to Rosalie's insights and feelings deep down about the market. So maybe, yeah, to get started, how are you doing today, Rosalie?
Good. I'm doing good today. Lots of interesting news yesterday and this morning. I remember you once told me that women tend to be very good at risk management and at trading. And so I wonder if it's just my female instincts that are helping intern.
Maybe, yeah. I mean, without being stereotypical, but a lot of what we see in even perps or even options, GameStop style, very, very casino like, very high adrenaline rushes on the way up, depression on the way down. And maybe it's not for everyone. And then again, not the female or women, maybe a bit more planning for the future perhaps, and risk management, making sure you don't lose all your investments in a single candle is a different way to trade, and maybe women are more comfortable with this. But yeah, the this is how I trade. So again, I don't like the 100x uh, gains. I'd rather have a lot of smaller gains so that I'm feeling more comfortable with my trading.
Being a little realistic. Don't want to end up with a bunch of jelly
Oh,
shorts.
exactly. So this is today. We do stop losing, start trading, but we also do options hour with Brandon. But we will let's jump a little bit ahead and talk about that jelly. And yeah, I didn't know about it, but you're the ones that shared it with me just now. But I think here Abby is doing some level of um, summary of what happened. But yeah, what how's Hyperliquid doing? Yeah, I haven't been paying attention to
Yeah,
it.
I guess it's a 10 million massive loss at the moment. So someone shorted jelly and dumped all the tokens on Hyperliquid.
Yeah, we were chatting a bit earlier. This is maybe similar to the trade we've seen where someone shorted ETH or at least got liquidated, and the hyperliquid vault got stuck with a bunch of ETH exposure. They typically take USDC as collateral. So this was maybe giving some ideas to that jelly trader where, yeah, they forced the market to liquidate themselves. And now, again, Hyperliquid is stuck with that maybe position because that's how liquidations work for Hyperliquid. So, yeah, I'm sure no one heard about Jelly. Again, the fact it has 20 million market cap is surprising in itself. But yeah, in a way, um, maybe that's also dangerous for Hyperliquid itself because they could be now exposed quite a bit. So, um,
The first time I heard about jelly was last week. Somebody asked me if they should get into crypto and that they had heard about jelly. And I was like, why are you starting with jelly? Start with Bitcoin or ETH. But I guess maybe it's something more normies.
so this is bull market vibes too, I guess. I'm my family for some reason doesn't ask me this, but a lot of people say when my extended families, my old friends from high school, ask me about crypto, this is signs of maybe the bull market maybe being over. But yeah, jelly, interesting. Did you tell them short, or what was the advice?
No, my advice is usually to just, start with something simple on Coinbase, like Bitcoin or ETH, not to go into crazy protocols nobody's heard about. That's quite risky.
Definitely, and Panoptic is also a good way to start, but only if you know a bit more about the risks. We're not an unknown protocol. We do a live stream show multiple times a week, so you guys know us. But yeah, it's a good segue into. Again, I wouldn't recommend anyone to start with options unless you have extensive trading experience. But yes, what we're trying to show here, even with Rosalie, that even though she had very little experience, now she's a master. We can see from the P&L chart, but let's go over. Okay, let's go over maybe some of the positions that we have. But yeah, this is the landing page on the Panoptic interface. What do you see? What do you want to look at?
Yeah, it looks great. I'm very excited about the positions. I'd like to look at the Bitcoin ETH one because I think we placed a new trade there recently.
Yes, and these are the markets that the intern has positions in. We're spying on them using spectator mode. This is how much money the BTC position is the BTC portfolio short is making. One that we have been successful at, again, 10% PNL now, is a short position on the ratio. Another one that we've opened is this delta neutral. Both of them are making money, get big green. And let's go to the more recent one. And this is one of those trades where we're comfortable with the positions we had. We wanted to maybe get a little bit more exposure and added a new trade, a new position. It's a different one. It's a one that kind of works with the assumption of this of the token, if you want, that's traded. And yeah, so can you tell us about what we have here for that BTC ratio trade?
Yeah, I think this is a more bearish delta neutral position. Still in range, quite wide range, and the price has moved in our favor a little bit since we opened.
Yeah, and if we were to go back to the initial point, we would have a tiny profit, which is the fees accumulated. And this is what the goal of a delta neutral trade is to just get fees on the profits on the fees or the premium. But yes, this was off centered a little bit. If you look at the curve, the max profit is below the current price. So yeah, starting here, it moved down. It is moving the right way. We're making money on both the fees and the appreciation, and we can look at the premium over time, but it's going up. Lots of trading. So what do we do with this position? What should we do, you think?
We should definitely leave it. Only 3 days. I think this looks good. So far, I'm surprised to see nobody's buying any of these
Mm.
options yet, but there's still time.
Yes. So these are puts in a call. People can buy these options. The put is out of the money, and the call is in the money. So buying options in the money typically is a little bit more risky. It has a little bit more deltas, meaning that you get some leverage, but then it could go wrong kind of quicker if you want, because you're almost kind of like buying the underlying. But if you are very bullish, that's a good play for buying options, say, in the money. Or you can create a spread or a multi-legged strategy. But yes, the in the money option typically are traded for like unique purposes, whereas the out of the money is what people go to at first. But yeah, I'd say good opportunity to buy some options on the ratio or some more. But in that case, you were the only liquidity providers. We're the only ones. I know there's a few other people actually. Huh. So maybe there's actually more liquidity than we deposited. So there's some room for buying activity. Um,
People are learning selling is more fun than buying.
exactly. And the theme, if you want, and whenever I ask Rosalie about like what her gut feeling is about one token, it's never it's a bullish, bearish, neutral. That's fine, but it's never buying options. And again, you get to a point where we've had I don't know 10 successful trades and one or two that went against, and one of those were buying options too. Because statistically, it's hard to be consistently right with buying options. So selling options more fun, more it's more fun, but also more capital preservation, risk management. You get paid for taking some risk. I like to get paid and not pay. So that's also how I try to shift the focus of what should be traded given kind of a token. So this is good. Very great positioning here on the BTC, the ratio. We're very far from the flippening, but it's fine. We had a Bitcoin, ticker Bitcoin trade and a eigen token trade as well. Those went the same way, and then I had a quick peek, so there's nothing more. Same thing with the delta neutral positions that we have on ETH USDC. So I would say that we and this is also what we have in the title. It's actually good. The goal is to have options that are monthly in time scale. You only have to manage them every 2 3 weeks, so that's fine with if there's nothing to do on most days. But here it might be a good time to diversify, get a trade in a different underlying, and then you did mention um, one underlying in particular that you wanted to trade, right?
Mm-hmm. PEPE.
Pepe, the OG, the granddaddy of options of meme coins. So here with Panoptic, we can trade options on any pair if there's a Uniswap pool, and you can search for them again. Let me go there directly. List all the Pepe markets that exist, the 100 bips, 30 bips. USDC. Some maniac did this. But yes, we have three markets to choose from for trading Pepe. I would go with the ones which have the most TVL and daily volume. Oh, and some reason the 30 bips definitely has more oomph to it. It has $52 million worth of TVL. And maybe let me zoom just to be sure. So the Pepe 30 bips has 50 million worth of TVL on Uniswap and almost $2 million worth of volume on Uniswap as well. So it's a good ratio. If you were to compare to the 100 bips, barely any volume. So that's kind of a weird situation where I think the liquidity may be misplaced or price hasn't moved too much. So given that there might be a tiny bit of liquidity already in the 100 bips, I would strongly recommend the 30 bips because the Uniswap side, if you want, of the Pepe pool is very healthy. Lots of TVL, lots of volume. And if we were to look at the liquidity, oh, yeah, okay, I'm zooming in and out. It screws up the alignment, but uh, liquidity in Uniswap is actually pretty healthy. Like, I don't know, 20 ETH worth of liquidity. So that's going to be like, again, hundreds of thousands of dollars of liquidity. So, this is a good, the 30 bips could be the best opportunity for trading these PayPay options. And
71% volatility. Interesting.
yes, so it's higher than most coins, of course. It's Pepe. You expect some volatility, but it's actually the IV percentile tells you what it is. It's a little bit low-ish, but it's fine. We can certainly be a bit more directional if we need to. But from the markets page, we can go to the trade page on Panoptic. And in this case, we don't have access because we're in the US and we're not trading, but we'll simulate a trade. And maybe we'll post this, I guess, in the chat. Uh, but yes, same questions maybe I'm going to ask you that we ask every time. We're trading the Pepe ETH ratio. So you don't have to think of it in terms of price in cash or USD term, but rather in ETH. So do you think Pepe will outperform ETH's performance, underperform, or stay correlated, meaning it's gonna not change more with the ETH price?
I believe it's going to outperform ETH a little bit,
A little bit,
just a
okay.
little.
And we are the only ones in the pool. Typically, this is a problem for most system where you need liquidity, you need trading. But in our case, we can sell options as many as we want and get paid. There's no market maker needed in the PayPay pool for us to work. So that's easy to say. We start with selling options because that's the only thing we can do. As I mentioned, this the selling of options. If you are very bullish, this is the put option that you can sell, and depending where you position it, it's going to be very bullish, maybe a bit more neutral, and that's kind of one way to start. Um, one, and this is one type of trade, and we can put a pin on this. The other trade, which is you said bullish to neutral a little bit, right?
Mm-hmm.
So we can look from the different strategies. We cannot buy options, so put is the only one. One thing that again I think works as well is still have a put but a call at the same time and do this a bit in a way that's offset for the current price. This one still has positive slope, positive delta on the way up, but if it does go very high, you could lose money. So this is maybe a bit more risky in the event that you're too right and you lose money. Given that the price here over the past month ish, yeah. What do you think? Do you want to be bullish and be covered in if it does go very high, or you're okay with taking some upside risk for more returns or more fees?
I'm okay with taking more. upside risk. I looking at market cap and everything I know about Pepe. Although I know you said not to think about it in terms of price, I wouldn't expect anything too dramatic to happen, and so I think this feels pretty comfortable.
Oh, yeah, perfect. So this is a straddle, and it's sold out of the money a little bit. So let me start again. But we go from that strategy tab, we go to strangle, and then we maybe align this so that it's a little bit out of the money, so that there's a good slope here. The max we make is a bit above the current price, and we collect fees when it's in range. Because it's a straddle, also it's twice as capital efficient. So you have some risk on the upside and some risk on the downside, but then you get twice the fees that you would do for just one kind of the one leg that is kind of a put. But yeah, maybe I'm going to trade this pool as well, because if someone sells an option, you can buy. There's a flywheel, and let me make it so that anyone can trade. I'll paste this in YouTube, but this is the link that you have to look at if you are trading. Want to trade a Pepe straddle. That's slightly bullish. Very cool. So if we're to go back to the oh yeah, the option. Yeah, there's not much. We're the only ones there, but yeah, this is a good trade. The intern portfolio, I think there's nothing more to say, because all the trades have been working for us because the market is stable. There's a bit of upside move, but that's not 25% move that we've seen over the past few weeks. So it's okay to just do nothing, and then other people can spy, but all the positions are healthy. There's no point. But yeah, maybe the intern will have a new market, the PEPE 30 bips to trade with when we come back on Friday.
Hopefully, yeah. Meme coins are very fun to trade on volatility and fees, so I
And
enjoy
if
it.
you remember the I mean, Pump.fund has the pump swap. Maybe we'll cover this with Brandon, but Pepe, even Shiba Inu, Doge, those OG meme coins, they are still pretty actively traded. It's, as you say, it's a fun way because you feel like it's not manipulated, whereas some token launching systems within a day, you lose all your money. Here, it's going to take years for you to lose your money in Pepe, maybe, or you're going to make a lot. So it's very much more mature and much better. It's in a way, it's a blue chip meme coin, if that makes sense. But yeah, fantastic. So in turn, we'll have some Pepe exposure, and yeah, so we'll see how it goes. In the meantime, we have Brendan here, Brendan Lee from the research team. We're going to do options hours with Brendan. We'll cover the news and the events over the past week. We jumped the gun a little bit and talked about the jelly fiasco, but that's fine. Otherwise, yeah. Um, how are you today, Brendan? And I'll say goodbye, Rosalie.
Bye.
All
See you,
right,
Rosalie.
happy trading.
Hi, I'm Brandon with the research team, and yes, it's a happy Wednesday for our options hour. And yeah, very excited to be discussing the market and some of the recent news that has happened.
Of course, let's do it.
So first up with the markets, we are, even though Pepe's up, most of the market's down. So a lot of alpha there on Pepe. Would love some insight there. But Dow Jones, S&P, they're all down anywhere between 0 and 1%. NASDAQ down almost 2%, 1.68%.
2% is a bloodbath in equities.
Yeah.
It's every other day for us
I
in
mean, we've
crypto
been
world.
pretty choppy. We saw some relief on Monday. Now we wake up on Wednesday with Bitcoin and ETH also down, or just about 2%. Bitcoin down 1.7%, ETH down 2.4%. But Pepe up over 8%. So what is going on there?
The jelly trade now, it's to get more Pepe, maybe. Again, I think in a way, when you're trading meme coins, and maybe the token launcher paradigm is kind of has run its course a little bit. Like maybe you go back to the basics. Maybe you go back to where the communities are the strongest and the most active members. And again, um, we look. I know take your Bitcoin a bit more. I went to the parties; they're still pretty fun. And then if I were to do some trading, I would say, okay, where did I get the most fun and had the best party? So I don't know about Pepe, but yeah, this is all about communities. It's all about this. So I'd say that PEPE has a lot more history and then creds, if you want, than any of the newer ones, and that maybe that's flight to safety in a weird way.
Yeah, very interesting. I guess I haven't been to any PEPE parties, but um,
I don't know if they exist. And yeah, I'd be worried. I don't know.
pretty anonymous, I think, this team.
Some
Okay.
market makers are huge PEPE holders, so maybe they rode the wave. Maybe one of the, I mean, Shiba maybe a bit before, but yeah, PEPE was a very, very uh, organically grown token for sure. But yeah,
Yeah, and it's old and it's still around, so surprisingly has some staying power as a meme coin, unlike some of the others launched earlier this year. In the news of Trump coin and Donald Trump's family, we have World Liberty Financial actually announcing their launch of a new stable coin, USD stable coin named USD1. And so we have some details. They published a press release yesterday on Tuesday, March 25th, in the morning. It was front ran the day before by CZ Ping of Binance, or formerly in Binance. I don't know. Is he still at Binance?
he went to jail for it. I don't know if he's back.
Yeah, let's see if I can even share my screen here. Just show
Oh,
this tweet here. So this was on March 24th on Monday morning, at least U.S. time zone. And yeah, there's of course on-chain analysts, front ran this much earlier, and they saw this stablecoin contract on Ethereum, Etherscan, also on Binance Smart Chain. And so CZ saw this and tweeted out, and that's when it kind of got a lot of attention about this new stablecoin being launched by World Liberty Financial. The stablecoin is not yet tradable or usable, but in the press release, they announced that it will be basically a stablecoin that doesn't generate any yield. It's meant for more like institutional players, users that need a little bit more, maybe regulatory standards wise, like being able to access it. And so they specifically use the wording of like no complicated XYZ, of yield generation. So it is backed by supposedly cash assets, cash equivalents, that kind of thing. But no native yield for the actual holders is planned. And so watch out for this stable coin. Is it a bullish sign of more institutional involvement, or are we at the
yeah. I haven't kept up too much with World Liberty. If they, I don't know if they use a institutional first approach, which would be a good way to kind of get into the realm, because we have Aave, we have a lot of existing protocols that serve the long tail of unregulated actors, perhaps. Maybe they're also following the Aave playbook a little bit. They have their own GHO Go stablecoin as well. It's just a way to generate liquidity and kind of trading. But yeah, again, the regulations, if there's more clarity, you may see a lot more of those, or maybe a lot less, depending on how strict they are. But it seems like the most beneficial way of creating a product, which is stablecoin. And again, you get the cash, you get bonds. You don't need to get the yield down to yours, maybe, but it makes sense from a business model perspective. If it's for the institutional users, also makes sense to have this source without having to go through even USDC or other types of liquidity. The part about not leverage, I think, or not yield bearing, I think that is also makes it a bit more complex from a regulatory standpoint. Like, yes, it might be yield bearing, but lending, whether it's liquidations, whether it's risk or bank run, it makes the whole thing definitely, again, as you say, they emphasize the simplicity of it. So I can imagine that any stablecoin that's either yield bearing, it's tokenized treasuries, I guess, at this point. So it's a different instrument than just cash. So yeah, interesting to see what goes. I think there's going to be an expansion if there's more clarity in regulation, but then maybe some consolidation at the end of the day. That might be where the play is there.
Yes, there's actually a couple of stablecoin bills floating around the House and Senate. I think one is called the Genius Act that came out of the Senate, and they're trying to loop in a second bill that has to do with all sorts of regulatory standards of stablecoins and try to get them both passed at the same time. So there's some concern. Coinbase is deeply involved with pushing this second bill, and there's some concern that we can't get both bills out at the same time, and it might stall the first one. So definitely lots coming down the pipeline at the same time, and hence the more leaped moves to start your own stable coin and compete with the big crowd of Tether, USDC, and others. They took a jab at Tether apparently and some others by saying they are the stable coin that is superior to anonymous backed stable coins and the decentralized or algorithmic, something like that in their press release. So they kind of took a stab at any anonymous type companies. Of course, we know who is behind Tether, but it's kind of mysterious. So definitely trying to enter the field, spark some fights here. And if there's no yield bearingness of it, they're keeping the yield, of course, of the treasuries, right?
Tether's kind of business model, and it makes them a lot of money. So yeah, I'd say that the Tether is a bit more like a black box. Some people say no, of course they are audited, and we know, but yeah, I would be a bit more comfortable with US centric, maybe US focused companies holding US bonds and US regulations. And again, this is the simplest build that will benefit everyone in crypto if it passes, and I'm sure a version of it will pass. So yeah, very excited. And again, maybe we'll see a different explosion of asset-backed meme coins and hopefully less than those algorithmic ones.
Yes. Well, in the options related news, we'll jump over to some stats of derivatives. So first we'll actually start with futures. So what is going on with funding rates this week? As you see, most of the time, the Bitcoin funding rate is positive. Same with the ETH funding rate. There was a huge dip back there in February. I can't remember what that was. But
the other one was, I think, ETH Denver was another one.
Yes. Right here, just right before ETH Denver, we saw another dip. I think maybe people were talking about Athena and the basis trade. But as of more lately, in March, you see we've been back to positive. But in this recent week, lots of tariff turmoil coming up, lots of uncertainty in the markets. Lots of the volatility, though, is down, but a lot of eyes are focused on April 2nd with the Liberation Day, as it's been termed by President Trump in the US, where there will basically be kind of the big tariff policy going out, some matches to bring up the trade deficit. So there's a couple of countries and blocks of nations that have US has trade deficits with. And so basically President Trump has been threatening to raise the tariffs to match them equally. Of course, on Monday, the news was that the U.S. policy would be a bit lenient and have some exceptions and provide relief to certain tariffs, and that caused a big swing upward movement in the markets. But then more uncertainty going forward today and yesterday, and so markets are down, and we see funding rates quite low, which means we're even seeing negative funding rates. So that means the short side of the futures or perpetual futures are paying the longs, which means basically there's more demand for shorting the market than there is for going long the market at this point. So we're still seeing a couple of bearish indicators here.
Yeah, I think it goes with volatility. If there's not much more happening, you see these like asymmetric moves be less prevalent. And again, the spikes to the downside we see is following or sometimes predating a big downward move. So people are positioning themselves. Here, that I would say is because there's not much activity. Those that trade can be directional both ways. Some hours of the day goes negative, some positive. But yeah, I would say that the fact it dips into the negative zone is mostly because there's less trading and less, as you say, less certainty, but less kind of positioning, so that you have these outliers kind of maybe exposing themselves.
Yeah, it's definitely a fluctuating thing, right? And the standard, it looks like it's typically been around half a basis point positive, 0.5 basis points. And so we're hitting nearly negative half a basis point, which is about 1 basis point lower. So it's not gigantic, but it is definitely a very not
Wait, can you look
common.
at the ETH one? So this is Bitcoin and might be even
Yes.
the most traded because now you have the ETF and a lot of instruments that exist that can help with hedging. But yeah, ETH is also maybe tethering. But yeah, you don't. When it's red for a long time, then yeah, look for some of those basis trade based protocols. It's gonna be a lot of hurt. But yeah, for now it's
Yes,
fine.
I mean, I don't know how long Athena can sustain long reds, but we've only seen dips for now, so
Or
some
and I say
slight
it's probably it can probably survive a long time. It's people will
yeah,
now panic and say no, get me out of here, and then now the whole thing will unravel.
yeah.
I don't, but that's fine. This is a known unwind risk for many entities doing the
By
basis
now
trade.
you'd think yes, very known. All right, well we'll jump to the options side of things. We'll take a look at Deribit's stats, and so we have a big expiry coming up in just 2 days on March 28th. I think that's Friday, this Friday. So that is where the most options on Deribit are, and you'll see there's a big preference towards call options, almost twice as
Yeah, we
much.
see this on Panoptic as well too. Quite a lot
Oh
more
yes,
buying on the option on the call side.
so a little bit more bullishness on the option side than on the futures side. It looks like, but most of the calls here are out of the money. Almost 90% are out of the money. That's because the price has been quite low, quite bearish in the recent few weeks. And on the put side, there's slightly more that are in the money. So we have nearly a quarter, or 24% of the puts expiring this Friday are in the money. And so expect a big reshift here as this expiry comes and people rolling over. We see a lot of trading going on the April 4th expiry. So people opening up a lot of new positions for the pushing out another week, and a couple more coming out April 25th. So another month. So expect some big market sentiment, especially around this April 2nd day as we approach it, and more clarity comes out as far as the tariff policy that everyone's watching. Any
And
comments on this?
no, that's right. The a lot of what we see on Deribit is it's almost zero DTE. So 1 day, 2 days, 3 days from expiry is when a lot of folks are speculating short term. And I like the so paradigm OTC like they have a trade tape if you want a where you can track all of the trades in real time that are sold OTC. And yes, it's also very short dated. So that's kind of a sign that you expect to make money quickly and you trade differently than if it's a longer term. So in that case, the 26th of December 2025, it's still pretty like a large volume, a large amount, but the traders in these will likely be much different than what you have for the shorter dated one. And yeah, the December one, I see barely any in the money options. Of course, it went down, but it's so that the level of trading we see in the short term just means that it's speculating. People are trading every short expiries, rolling to the next short expiry. So you would kind of help. So again, I don't know if the lots of trading this date doesn't mean it's because some big events happening. It's just that people are trading very, very short dated options. In our case, in Panoptic, it would be the 1 week or even the 1 day expiries, which are very, very narrow. And the 1 month that we offer to most users by default would be that April to May type of time. So yeah, very, very. So that tells you about the might not be for hedging that people trade short dated options with more speculative purposes, at least on there. But
Yeah, there's about 12 times more notional value here than a year from now. We got yeah, was that 12 billion notional value? And so if this is mostly speculative, we're seeing a lot more call buying across the board on Deribit and Panoptic. So very interesting.
yeah, and it doesn't mean that the price is going to go up or they know something. It's just things that they foresee a more immediate move to the upturn, or at least the how quickly it's going to move. The violent moves will happen on the way up,
Hmm.
which is different. Like it doesn't dictate anything. It's just what people think. And it's true in S&P 500 and equities, you may be protecting yourself about violent moves to the way down. So and then that would create a lot of put skew. But yeah, call skew is at that level of if it goes down, it goes down. If it goes up, it goes up big typically. And since we had a lot of small large moves, people are just prepped for the reversal to happen.
Yeah, and this is quite common, right, with this put call ratio. I think the put call ratio is around 0.5 or so, maybe a little bit. Yeah, but I think we do typically lean on the call side of the market. So maybe nothing out of the ordinary here. We'll jump down to the volatility. So I kind of like this chart that Derek puts out. They have the actual historical volatility plotted right on top of the Bitcoin volatility. Basically, this dvol here is an implied volatility index that Deribit runs, and you can see there's actually a crossover here, just barely, of the actual volatility dropping even lower. So we're already at quite a low here on the month with these 50 range volatility. We've seen the IVs go down to about 47%, and the actual volatility drop, below 47. So we're seeing very calm markets here as far as the volatility goes.
Which one is the
The gray one is the historical volatility. The green one is the IV.
Interesting. I think the realized volatility, which is I think what historical is, typically it's below the implied or the volatility indices. That just means that you don't know about the future. You'd rather be protected, so you are intrinsically kind of willing to pay a bit more for that uncertainties. And it seems like, surprisingly, over the past week, it was the reverse, more less. Oh, really? Can you go back even further? Maybe it's
Yeah.
a newer metric.
Looks like we can only go back a month.
Okay, that's interesting. Again, there's a trade for everything. I would say that you would maybe not be.
We can zoom
You should
that
not be.
up.
Yeah, you should not be selling as much if there's a huge discrepancy like that. Maybe buying options, and what we're seeing is there. So that means that the volatility that you buy at is lower than realized. So you are buying an option that has a slightly higher chance of being successful. Could be a straddle, could be directional, but at least the cost would be less than the historical one. But yeah, that's actually
there's typically a premium, as you're mentioning, where the implied ends up being higher than the realized, and so it is kind of interesting that in the past, or at least early March, we've been seeing kind of the flip version of that.
Interesting. And Nathan from the research team, I'm sure, will have a lot of would have a lot of comments. But yeah, it seems to me like maybe the short termness. Oh yeah, can you go down? There's implied volatility curves. Let's we can do the research, but yeah, a lot of what we see is interesting. So yeah, the vol is definitely higher for the short dated options, which is fine. But this is because maybe there's a lot more activity there. People are valuing volatility a bit different. But yeah, it's a lot sharper. You have a lot of 150% volatility at the whatever 50 or 200,000 strike. Interesting. Yeah. So maybe with Nathan next week time we do research, we can cover that. But yeah, that's interesting. It's a good data point to know.
Yes, so lots going on in or maybe the very calm markets, but to a couple of in the news rumor mill things. So it was very interesting. I was looking at some of the Deribit Insight reports, and they mentioned in their own report from one of their analysts the rumor that Deribit was being acquired by Coinbase potentially. So Coinbase is in talks, as a lot of news outlets have been reported, to acquire the biggest options exchange, one of the oldest, Deribit, in crypto, and valuation rumors around $4 to $5 billion there for the acquisition. And so Deribit is based Dubai, so a little bit interesting for Coinbase.
What's the purchase price or the suggestion one?
They're saying the valuation was around $4 to $5 billion.
Is the
numbers being floated around.
Not Pocket Change actually from Coinbase. I think their market cap is like 20 or 30, I think. But yeah, it would be a sizable purchase for sure.
Well, I think they've had pretty good revenue years. They do have a stake in Circle, and that's why you see that huge USDC collaboration. USDC has been printing revenue too, so a lot of good.
No, that's right. So the market cap of Coinbase is 49 billion, so 50 billion
That's
It's
a
still,
big size, yeah.
yeah, exactly. So, and it's a they have futures and derivatives on the Coinbase app for regulated entities.
And
They have,
perps, yeah,
yeah, and perps. They have the regulated pools as well.
right.
Maybe we'll get regulated options trading on uh, American style expiring options. The
Yeah, it'll be
panoptic.
interesting because their perps on Coinbase are not available to US users right now. Futures are. So if they
Oh,
were to acquire someone like Deribit that is not available to US users right now, I would assume it's still not available to US
sure.
users. But
Yeah, and yeah, and I would say that the yeah, I don't know, when you trade options in prime brokerage firm, regular brokerage firm, it goes through kind of a exchange, goes to prime broker, so you don't even know exactly if it's SIBO or mean AMX, or you just don't know exactly who's selling the thing. So I don't know if they would buy Durbit and have this be available for brokerage firms so it competes with the SIBO or Chicago Board of Options Exchange, or maybe it's just stays internally and they have kind of this options offering to non-ex ex-US users. But yeah, interesting. I think they are definitely on the path to being one of the largest kind of fintech entities for everything digital assets. And then the base strategies might be where we connect this all to being on chain. But yeah, the
yes.
if I were also at Coinbase, I would look at again Deribit, any options exchange, uh, as a way to kind of diversify and get more presence in all of these, like, yeah, in the
Yeah,
digital
and
asset world.
maybe they see something coming. This could be the year of options 2025. They did report in their own
Mhm.
annual report last year that they saw volumes growing in derivatives products by 10,950% in 2024. So they're very bullish, it looks like, on derivatives products. We've seen a lot of activity there. Robinhood earlier in the year, January, announced that they would be launching crypto futures, which I believe are live now on Robinhood. They have futures for ETH and BTC. They have both mini futures and also the regular futures. And so, yeah, a lot of competition here in the space. Kraken, too, a big competitor of a different slice, maybe of more advanced traders in the US, but a big competitor with Coinbase.
Did they
They
also want to buy?
acquired a
They
futures
acquired?
exchange. Yes,
Oh,
they
I see.
acquired Ninja Trader
Uh-huh.
for 1.5 billion. So not options, but futures. So a lot of eyes on derivatives products here and competing with each other and SIBO and IBIT and all these.
That's right. Is it going to be the established players and the old guard who's going to capture this, or the new ninja trades of the world, where they are crypto native? They probably have a much more lean structure, and yeah, can probably get stuff done much more quickly than the old players. Interesting to see.
Well, sweet. I'm crossing my fingers that options will be the product of this year. And so, yeah, we've
It's
had
already
big
it is
launches
in my
in
heart.
crypto options.
It's the product of 2025. I think yeah. Anyways, I don't want to put everything back to panoptic, but yes, the options world, the derivatives world, is extremely important in finance. You cannot function just by doing everything kind of cash secured and kind of unleveraged. Leverage not for speculative purposes, but for capital efficiency is what people are seeking. And options is a very, very efficient way of hedging in a way that doesn't wreck you. If you short BTC, the price goes up, you lose a lot of money. If you buy a put on BTC, price goes up, you don't lose much. So that's kind of one clear advantage. So whether it's on centralized exchanges or on chain, yeah, options are here to stay and kind of especially grow more, given that again, perps have had a lot of volume, but yeah, options and their advantage are still pretty significant here.
Yes, that's what we're all about here is options and turning LPs into option traders because that's what they're doing.
Oh yeah, we have the Migrator app. I'm working on it. Yeah, maybe I'll show you a quick. Did you have other stuff to cover? Maybe.
No, that's it, except for a couple of announcements coming up here. So while you pull up the Migrator app, we'll just make a few announcements. The live stream's coming up with the Uniswap Foundation. We'll be doing a live stream with them featuring Grow, our passive liquidity interface. It's basically the prime brokerage side of Panoptic, where you can lend to LPs and option traders within the Panoptic Uniswap ecosystem. So stay tuned for an upcoming stream there. featuring our grant supported interface for passive liquidity providers. It'll be very exciting to discuss with them. We also have we run this options hour every Wednesday. And so, yeah, stay tuned for more news. Friday, we'll have another stream featuring Rosalie and helping the intern stop losing and start trading. So lots of big announcements coming up too with our V4 pools. So I'll spill a little secret here that some V4 pools are live on our interface app.penoptic.xyz that you can trade early and get in early. There'll be some really fun competitions and announcements coming out in regards to our V4 pools. So stay tuned for that. And
Did you say competition? Oh,
yeah, we'll have some contests going on. So more details to be released.
Cool. All right, let me see if that works.
But in the meantime, the migrator here that Guillaume is showcasing or will be showcasing is for those who would like to just quickly, easily, also save some gas, be able to take their positions in other, I think V3 or V2 or you have to tell us where you can migrate from, but it's to make it easy so you can deploy your LP positions into Panoptic. You're going to be earning on average, I think the latest number was around 20% more in fees. And so it's a kind of a big boost for doing the same thing. How it works is basically your LP position is it's sold to option traders. And if there's no option traders, it's not idle. It's providing liquidity in Uniswap pools. So it's basically an added boosted yield. You have the same position, but it can be hypothecated to these option traders who are willing to pay on average 20% more than the Uniswap fees are paying out. So your baseline is your Uniswap fees, but you can earn more by migrating it to Panoptic. And so if you're an advanced user, you can close your LP position, you can open it in Panoptic. But for those who want an easier or quicker route, we are working on this migrator to help you streamline your movement to start earning more.
all right. So for some reason, Chrome is not cooperating, but let me see if this works. Oh no. Okay.
I guess we'll have to stay tuned.
It's going to be even a better showcase on Friday when it's done. So yeah, okay. For sure. I cannot share non-Chrome tabs, and then you're gonna have to wait for next meeting. Migrator will be a very, very cool product, but yeah, helps with anyone that has a position on Uniswap. We can easily transfer them to Panoptic, so and more. So, but yeah, let's keep this for next.
Stay tuned for more.
Yes, exactly.
Yeah, so Friday, same time as Stop Losing, Start Trading today. So stay tuned. Join us for that. And any other updates or announcements?
No, that's it for me. And yeah, thanks to Rosalie, of course, and also Brandon. This was fun. A PEPE trade. We'll see how this goes for the intern, but this is also pretty cool. But yeah, thanks everyone. And yeah, we'll see you on Friday.